Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Wednesday, December 19th, 2018. So we now finally have the big FOMC meeting out of the way. We had a typical Fed volatility. Before there was some volatility yesterday and today before the meeting, and certainly after. But let's look how we close the day. That's most important. We have QQQ, I think, some very interesting developments today. QQQ closed right on that, had this support line here, right off there were several reactions, not just one. There were a couple there on the April lows. We had the candlestick before the lows. We had a little punch through there, but this is where trading normalized. So that is a key level. That was initially, even from back here, what I was looking for. Now, again, the market's going to do one of two things usually when a lot of eyes are on a level. As I said, it'll either reverse just shy, and so that's why I've started to shift towards a bullish stance recently and continued. I mentioned on Friday I began for the first time since earlier this year, where I moved, all long-term funds and 401k funds into cash, taking that out on Friday and scaling in. So I did my third lot today. I think it's an excellent time to be shifting money back into equities for what will likely be quite possibly a double-digit rally. I think that's easy to say, 10% upside on the next rally to come. And again, same as before. I mentioned the other day from the lows that we had. When was that? On Monday, looking for about on QQQ maybe 3% downside from there, and about 2% on SPY. So on QQQ we have now 1.81% or so. So we're still definitely some room to punch through there a little bit more. But again, on a scale of 1 to 5, this is a pretty good number as far as a support level. And then you add in the divergences, everything else, there's still potential. Like I said, we don't have buy signals yet. I was ready, considering an official long entry on QQQ, maybe some other index ETFs on the site today, but I didn't see what I wanted to see. To do that today would have been a reversal like we had back there, and what was that, in the February lows. So, we came down and closed too close to the lows today, so we can still get a wash down move tomorrow, or we can gap up because we closed on support. Let me get to all the levels here. But either way, so we're still at, and I mentioned that even back here, that sometimes we can reverse and go, from short to long. And I said this time it would be different. Back here we did that, short to long, short to long. There were some pretty clear buy signals and all that on the 60-minute charts. But this time around, it's more of the risk rewards diminishing on the short side and start to scale in long. So for official trades, don't have that confidence yet, but maybe tomorrow it may come on a gap up, but we need to see some type of evidence of a reversal, at least a decent reversal here, or I'm sorry, decent evidence of a bottom. But with that being said, I'll tell you, this is compelling. Depending on what happens tomorrow, we may add some official longs on the site, both indexes, sectors. There's some sectors that I'm looking at, and in fact, I did one video today, and I'll follow up with part 2 of that as soon as possible here. All right, so that was QQQ. Now SPY just undercut. And so, and that the whole thing about a lot of eyes watching the same levels here, and that was again, SPY had a little bit different lows right here, but they roughly close by, and I have that line again right on the February low. So what happened is we paused on it a couple days there. It came close, just above that level, sliced through it today, but closed marginally below it. Again, considering the scope of the volatility, not much, but again, it's the fact that we're in very close proximity to key support right here with these potential divergences in place, and that again looks like we're setting up for a nice rally. Whether it's going to come on the final few trading days of the year, what is today? I think we have about another 6.5 days, or not. I think we'll get one very soon, and it'll be quite profitable to trade on the long side. All right, so we have here IWM. A lot of support back here. Again, just a very solid, well-defined support level. This was early January of 2017 that started, and that continued on all the way through August. So you can see, 9 months of trading where IWM found support there. Remember, IWM is not as important as the large caps. That's why I usually start with and lead with QQQ and SPY. But it is worth noting, and these small caps have had the snot knocked out of them. So whereas the large caps, believe it or not, and somebody asked in the trading room today, is this bear market yet? Technically, it's not, but that's semantics. That's just definition. The small caps are in a bear market, as you can see on the pop-up box to the left. They've dropped to about 23% off the highs. Whereas you don't yet have a 20% drop off the highs on QQQ or SPY. But with that being said, that doesn't really factor in much of anything, whether you're in a bear market or bull market correction. What I see here is an index, a very oversold with strong bullish divergences at support, and looks like a very nice rally is coming, possibly as early as tomorrow, or maybe at the end of the year. We're not going to see a lot of buyers step in, but again, there's not too many trading days, so I still believe the risk reward is moving to the long side. And that's not a buy signal. I think there's a lot of confusion on that. I think it's a scale in signal where you can scale in, gradually add to some longs. But once we get a solid buy signal, something along the lines of a bullish candlestick reversal pattern, big move off this support level, we should know it when we see it. And we haven't seen that yet, but maybe close. I usually don't cover the Dow because the Dow is only 30 stocks, but it is still followed and traded by a lot. And again, you can see it's just a common theme as I go through all these major indexes. You had support back here. There was that reaction low in February, almost a perfect tag of it back in April. And there we are today. And I mean, we parked right on it. So again, on a scale of 1 to 10, this is getting up there. I might not call it a 10, but I'm darn close to it. And when you couple in the fact how oversold we are with these divergences, again, there's longer term bearish developments, so you cannot dismiss those. I think the primary trend will probably continue to be to the downside going forward well into 2019 and probably beyond. But until then, I think we have a nice counter trend bounce coming up here, which is a swing tradable bounce before the next leg down. And again, I go through the 60-minute charts. Those same bullish divergences that were in place yesterday are still very much intact. We made another low. In other words, divergence lines are not trend lines. I put a trend line right here on SPY. Had one earlier, steeper downtrend line today, was taken out before the Fed, and then the Fed self took it down. Now we have three distinct reactions on this trend line. So I think this is the one to watch for SPY on the 60-minute chart. And again, the lower lines are just divergence lines. So they will, as long as you have divergences intact. And what I mean by that is if and when we take out this previous low here, and you make a lower low, you no longer have bullish divergence. So there is room if the markets want to flush out tomorrow or possibly on Monday. There's certainly room for a little more downside to keep these divergences alive and well. And again, it's not any one thing. It's this coupled with the divergence all the way out to the daily charts. And I wouldn't call today it could be a selling climax. It could prove. You know what? I'm doing this video so shortly after the close, I didn't look. There's a decent volume bar on SPY. Let's look here on QQQ. Nothing spectacular. And what did I want to do? IWM there. IWM some pretty decent volume. So we may be looking at a selling climax here, most certainly. And the one other thing I wanted to point out was surprisingly, the VIX was non-responsive today. You look at VIX, and we closed down. Now, I'm trying to process this. I'm trying to determine whether that is a good thing or bad thing. Typically, it's not good. And here's again the problem is everybody's looking for a big surge, and usually you get that. Now, if we already had that, great. Or if it happened today, great. I would take it on face value for what it is. But you can see back in February, we had a much larger spike in the VIX. The VIX went to much higher levels, and so far the VIX has been muted. So you can look at it one of two ways. You can say that there's no fear, and therefore this is bearish as a contrarian indicator because you're not seeing a lot of put buying. The VIX is just a measure of, it's similar to the call ratio, and It's a measure of put buying and fear in the market. So we're not seeing that right now. We're pretty much coming up and stalling out here around that 25.60-ish level. Maybe that is because market participants are seeing that we are at some levels that are washed out. And you remember, every bottom doesn't have to end the same way. All I can tell you is this is a pretty significant resistance area in the VIX. Now, as I said, if my preferred scenario happens where we have minimal downside, like I said, about 2% or so on SPY, 3% or so. Actually, back that out. That's what I said yesterday. So maybe 1% more on SPY, another 2% or so on QQQ. And if we get it, and let's say we gap down tomorrow and there's a surge in the VIX, that would look something like this. So imagine this is tomorrow's candle, get a big candle up there, and then we reverse, and that would play out nice. It would give us nice negative divergence here on the VIX and set the stage for a nice pullback there. So that's VIX. You have the other volatility ETFs, VXX, same story, down 0.47%. TVIX, these are some of the commonly traded ones, and they're all down. So again, take that for what it's worth. I just wanted to point it out there, and maybe we get that textbook looking capitulation sell-off that a lot of people are looking for, and maybe we don't. Something that was different about this top was a lot of people were non-believers because we didn't see a surge in credit spreads. That's something I've tracked over the years. In past corrections, I've noticed a spike up in credit spreads when you start to diverge. We didn't get it this time, and I remember when this correction started and there were a lot of non-believers, that was part of it because we didn't see a surge in that. So what I'm getting at is, every top is different, every bottom is different, and you may not get those things that everyone's looking for. In other words, a big flush out move with a big reversal candle that day, intraday reversal, a big surge in the VIX. We'll wait and see. So all I can say right now is it still looks to me that we are very close to a bottom before a tradable rally. But to be clear on two things, we do not have any buy signals yet. Hence, they're still being very light on the official trade ideas and holding off on adding any index. The broad market ETFs as long trade ideas right now. That may happen as early as tomorrow or next week. And the other thing is, don't confuse the outlook for a short-term rally with, a more bullish longer-term outlook. Who knows? We'll see what happens if we get a decent bounce here. Anything can happen. But right now, again, I think somewhere in the ballpark of 10%. I do have some target ranges, and I'll hone down those, try to put out some price targets, maybe tomorrow for the index ETFs, even if I don't add them as active trades. Because remember, tomorrow we're getting down to the end of the year. Trading volumes start to really drop off after this week, and that can lead to whipsaw signals and increased volatility. But I'll follow up tomorrow. We'll take it as it comes. But as of now, like I said, the case for reversal is looking even stronger after today. As far as the markets now, all coming down to those key support levels or slightly below, with those potential divergences still intact. The only thing missing now is a buy signal. And so maybe we get that soon, maybe not. We'll stay tuned. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.